Is Apple's next trillion-dollar valuation hiding in plain sight? Not in a new iPhone, but in a pair of smart glasses? This week saw the company's stock swing on competing visions of its future. Reports of an aggressive push into AI-powered wearables sent shares climbing, only to be hit by news of delays for its much-hyped Siri upgrade and fresh regulatory scrutiny. With institutional investors like Berkshire Hathaway trimming their stakes while others double down, the question for the market is clear. Is Apple falling behind in the AI race, or is it playing a different game entirely? Welcome to TickerWatch News for Apple, Week 8, 2026. This is the weekly breakdown of the news and market developments for Apple, piecing together the signals shaping its performance and its path forward. This week, the narrative is all about the promise and peril of artificial intelligence. It was a volatile period for Apple shares. After hitting a recent all-time high, the stock has pulled back, falling between 4 and 8% from its peak. Year-to-date, shares are down around 5%, trailing the broader S&P 500, which has been roughly flat. The stock's recent performance shows a decoupling from the wider tech index, suggesting investors are viewing Apple on its own terms. The past week was particularly choppy, with the stock posting its worst single-day drop since last April on news of AI delays, but also showing strong gains on reports of new hardware ambitions. The takeaway is a stock caught between a powerful long-term growth story and near-term uncertainty about its AI execution. This week's main events revolved around Apple's strategy in the artificial intelligence arms race. First, major reports surfaced that Apple is accelerating its work on a new family of AI-powered wearable devices. These include smart glasses intended to compete with Meta's offerings, camera-equipped AirPods, and a small clip-on pendant device. All three are reportedly being built around an advanced context-aware version of Siri that uses visual information from the cameras. The move is seen as an attempt to extend its ecosystem beyond the iPhone and create new high-margin hardware categories, playing to its strengths rather than competing with rivals on massive data center spending. The market reacted positively to this news, with the stock jumping over 3% on the day of the reports. However, that optimism was tempered by headlines suggesting Apple's ambitious AI-powered Siri upgrade is facing development hurdles and delays. Features expected for a March rollout may be pushed to later in the year. This news caused significant concern among investors, leading to the stock's worst trading day in months. The delays feed a narrative that Apple is lagging competitors like Google and Microsoft in the generative AI space and highlights the execution risk in its software strategy. Next, a shift in institutional ownership drew attention. Regulatory filings revealed that Berkshire Hathaway reduced its massive stake in Apple by about 4% in the fourth quarter of 2025, continuing a trend of trimming the position. At the same time, other major asset managers, like BlackRock, Morgan Stanley, and Vanguard, increased their holdings. This divergence paints a picture of Apple as a battleground stock, with some legendary investors taking profits, while others see continued value and are buying in. The overall tone is one of cautious optimism, contingent on Apple delivering on its AI promises. From a fundamental perspective, Apple's valuation remains at a premium. The stock trades at a forward price-to-earnings multiple of around 30 to 32, which is higher than many of its Magnificent Seven peers and the broader tech sector. This valuation is supported by the company's incredible profitability and recent strong performance. The first fiscal quarter of 2026 was a record-setter, with revenue growing over 15% to nearly $144 billion, driven by a 23% surge in iPhone sales. The high-margin services division also continued its steady expansion, growing 14%. The long-term story for Apple now clearly revolves around AI. The company is taking a different path than its rivals, focusing on on-device processing and a private cloud compute model to avoid the massive infrastructure spending seen at Google and Microsoft. This week's news encapsulates the narrative. If Apple can successfully integrate powerful, privacy-focused AI into its massive ecosystem of 2.5 billion devices, it could unlock a new era of growth. If it falters or is slowed by delays, its premium valuation could come under pressure. Looking ahead, the most immediate catalyst is a planned Apple product event on March 4th. While reports suggest this will be a hardware-focused event, possibly unveiling a new low-cost MacBook Air or iPhone model, investors will be watching for any mention or demonstration of AI capabilities. The bull case for the coming weeks hinges on Apple successfully launching its next wave of AI features this summer, as bulls like Weddish predict. A smooth rollout of a revamped Siri and Apple Intelligence could re-accelerate growth and justify its valuation. The bear case centers on further AI delays, mounting regulatory battles, and margin pressure from rising component costs. If the AI soap opera continues without a clear and compelling product release, investor patience may wear thin. The base case is a continued push-pull between these factors. Expect volatility as the market digests each new data point on Apple's AI progress and its ability to navigate a complex global landscape. Thank you for tuning in to TickerWatch. This podcast is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research before making any investment decisions. Be sure to subscribe, leave a review, and share this episode to stay updated on the companies shaping the market.